Hey guys, a lot happening in the markets lately. We weren't with you last week. We did do an emergency video, me and Spencer, about silver, the situation, and what was going on. We also kind of updated everybody the last couple of weeks about what we were thinking about gold and silver and when we were going to get out, how the situations work. So if you were one of my members on Against All Odds Research, you guys got a level to get out at for target traders around 111. We missed the top by just a little bit on that one. And then for myself, I run trend following models, showed that trend following system and where exactly you'd get out. And so great trade, riding silver all the way from the 20s all the way up to 111. I never get out of things perfectly. I don't try to get tops. So on the way down, I got out of the trade. So great trade, about 5x move for that trade altogether. So very happy with the returns there. We'll see what shakes out in silver. I want to ask Kashab about what he's thinking about precious metals today. Also, people keep bringing this up, Kashab, and he's the one to ask about it more than anybody else I know, which is money is flowing into Japan. People keep bringing this up, and if we're just looking at the currency, I don't think that's exactly correct. But a lot of people aren't looking at the currency; they're looking at the equities, and the equities at times can get bolstered by a lot of things. Not to mention, if we're looking at industrials globally, industrials are doing very well. Japan has a lot of industrials. I think what is it? Toyota is their biggest stock in the stock market, or number two or something. It's way up there. So that's really kind of giving a good boost to Japan at the moment. I'm currently long Japan, but I also know the currency is dog shit. And so the person to ask about this to give me a little bit more color on this one is Kashop. So what are you seeing in Japan right now? Do you think there's any reason that money should continue to flow in there? Or do you think this is going to end pretty soon?
Well, I think the equities and the currency are going to diverge. So the reason for that is because the currency is kind of blowing up. And I know that's a very loaded statement to make about a developed world currency, but that's how it looks to me. Like, I wouldn't be surprised to see the yen at 400 to the dollar. And believe me, I'm not a fan of the dollar. I think the dollar is heading lower as well, but it's a currency war. And in a currency war, it's all a race to the bottom and it is all relative. So I think the Japanese currency is headed there faster. And if you look at what happened in cases like this, in cases where the currency is depreciating rapidly, so you look at Turkey, you look at Argentina, you look at Venezuela, you look at all those economies. And I'm not saying Japan is like Argentina, but if you look at the parallels, what you see is that the stock market tends to do very well in local currency terms as the currency depreciates. And the reason for that is, well, how else do you store value? You cannot store it in bonds. You cannot store it in the currency. I mean, cash under a mattress, forget about it because that's going to lose value rapidly. So, what do? Well, you buy equities. And the equities, the companies, they have real assets. They are backed by real assets. So, if you have say Toyota, so you have a manufacturing plant and you're going to be cranking out cars, and those cars are going to be sold at higher and higher prices once you have inflation. So, in that scenario, the best store of value for you is equities. And what's going to happen is the money is going to move out of fixed income and into equities. So as the currency keeps depreciating, you have this bid on equities from institutional investors who aren't really going to buy commodities, but hey, they can allocate between bonds and stocks instead of 60-40. They can probably do 80 to 80-20 or even 100-0. So in that scenario, what are they going to do? Well, they're going to go from the safety of fixed income, which is not really safe in this scenario, and they're going to go into equity. So I think we can see a bid on Japanese equities that goes on for a while. And if you look at the history of Japanese equities, it is something that value investors have always liked because ever since the 1990 bubble burst, the valuation of these stocks has been pretty cheap and they have always been cheap. They have not gone anywhere. So now that it finally looks like it's mean reverting a little, I think it can go on a lot longer. But then the risk is you need to hedge your currency because normally I'm a fan of holding emerging market equities and taking the currency risk as well. But in Japan, I would say you have to look at an ETF like DXJ, which hedges the currency rather than be outright long the stocks. Although I think both trades should work out.
Yeah, I think it's It's going to be interesting to just look at this going forward because I think the one thing that's off everybody's radar is that currencies could be very volatile and could make some massive moves for the trading environment that we're in currently. If you're in a scenario where we start to see these commodities really put a lot of pressure on markets, emerging markets, and so on, we could get a very large move one way or the other in a lot of these currencies that people haven't seen move in big ways for many years. I mean, you go back to look at charts of currencies going back to the 80s, 90s, like you got these very large moves. There's a lot of money to be made in these things. And then basically around that point, they just kind of go dead as the central banks kind of get overloaded and all really deflating together and inflating together all at the same time. So I think that scenario where the central banks are in such control is kind of ending. You're noticing it in just the yield curve. You're noticing it in the Fed rate compared to the 30-year rate. Like they're not in as much control as they used to be. So I think that's going to allow currencies to start making some big moves. And if we just look at this simply and go, okay, we look at this like a primary trend thing. This is a continuation pattern, if anything. You have this big uptrend that's moving nicely. You have this consolidation here, and we're back near the old highs, which looks very similar to another thing in the market, which is the 30-year yield. If you look at the 30-year yield, it looks very similar to this. And so I don't doubt that this thing's going to break to the upside. If the dollar was to get stronger here at all, it would absolutely break to the upside very quickly. Now, the dollar has been weak, and this has continued to move higher all at the same time. So I do think that this, either way we look at this is probably still going to trend higher. But I would say if we're in a scenario where the dollar does anything, we're probably in a scenario where this is going to look like a big continuation pattern and then the breakout of another flag. So speaking of another one that, you talked about this one quite a bit, Kashop, which is, hey, I'm getting out of Bitcoin. Everybody thought you were crazy. Everybody was, right. I can't believe you're getting out of Bitcoin. What's the deal? And you've nailed it pretty well. I feel like you got out around here. I can't remember the exact time. You could add to that in a sec. But I feel like you got out pretty close to, a pretty good level, 90s to 100,000, somewhere around there. And then it kind of rolled over and really went down. You talked about the fundamental case about it. Now it's moving down lower. We're kind of at those old, I was trying to scroll like I'm at an actual chart. This is a slide, but we're near those old highs back from 2020. I want to say that was 21, which is near that 60,000, 70,000 level. And so, if there's a place for this to catch some sort of support, it's probably here. But I want to ask you, what are you thinking about this right now? What is the thesis that you had that it would go lower, and how are you looking at it now today? Do you still think it's got lower to go? Do you think this thing bottoms out at any point soon?
So I have been bullish on Bitcoin from 2016 to 2024. So that's a pretty long period to be bullish on one asset. And this is public. So if you Google my name and an article called Money in Bits, which I published in June 2016 at a platform called Value Research, where I was working as an equity analyst. So that was a time, I think I was the first person in India who worked in equity research to be bullish on Bitcoin. So that was a start. And then during my dollar vigilante days, I was bullish on Bitcoin throughout, and I kept that stance all the way until 2024. Now, in 2024, it was in Feb 2024 to be precise, Bitcoin hit a high of 64.5K, and I got out and said, this is parabolic, this is going to end, I'm selling it all. And I sold it all at roughly around that level. I kept my other coins. I sold my Bitcoin. I kept my other coins. And then in April of that year, I started adding back again. And by November, I was completely out of crypto. So I think I timed that cycle pretty well. And now, if I'm looking at it, so what I would say the fundamental problem for Bitcoin is that it was great when there was no USDT, which is the Tether. So before Tether, if you had to get into crypto, the only option for you was to take your fiat and buy Bitcoin with it. And whatever else you wanted to buy in the crypto space, you had to use Bitcoin and exchange it. So you wanted to buy Ethereum, well, the ratio was Ethereum to Bitcoin. Just like now you have ETH to dollar and ETH to USDT, and if you want to buy, say, Binance coin, it's Binance coin to USDT. Back then, it was all priced in Bitcoin. So this was a natural demand for Bitcoin that kept the price going up as adoption grew. Once USDT became very popular, well, people just started using stable coins. USDC came up, PayPal USD came up. There were numerous options available. So at this point, why would anyone hold Bitcoin? Well, you would only hold Bitcoin if you really believed in it. And what we have discovered is that 95% of the crypto space doesn't really believe in it. They used it when it was a transactional medium. But once it stopped being a good transactional medium, once USDT on Tron, USDT on Solana, all these other options came available, they just ditched Bitcoin. So right now, Bitcoin adoption is in permanent decline. So it's all social media, it's all marketing. So what the Bitcoin bulls did starting 2024 is they said, hey, it's digital gold. They tried to change the narrative. They came up with Bitcoin treasury companies, they came up with new ways of marketing. So there are a lot of paid influencer accounts which just say buy Bitcoin, on an everyday basis they post and they get 100,000 views and they try to lure in people by posting all this attention grabbing things, but it is not working. And the reason it is not working is because when one Bitcoin is $90,000, would you rather hold 90,000 of some other coin priced at $1 or one Bitcoin worth 90,000? And let's face it, the kind of people the Bitcoin bugs are trying to attract are not going to buy one whole Bitcoin for $90,000. They are going to buy $1,000 worth of something. So what do? Well, they buy Trump coin, they buy Fart coin, they buy any other meme coin that comes onto the market. So they are not buying Bitcoin. So who has been buying Bitcoin? That's the question. Well, the people who have been buying Bitcoin are what the old Bitcoiners are calling the suit coiners. So these guys, they come in, they think, oh, we are going to have leverage, we are going to do these products, and we are going to give credit card loans on Bitcoin, all this stuff. And it just ended up financializing the whole thing. And just like in 2022, we had a deleveraging event where platforms like Celsius, Voyager, BlockFi, they all went bust. I think we are going to see a lot of these new credit products, new leverage products, new treasury companies, all sorts of new so-called innovations, the financialization of Bitcoin. I think all of them are just going to blow up, and I see a lot more downside ahead. Now, people might say, "Oh, look at the RSI, look at uh, put out any technical indicator, and like look at how much it's going down. It has to bounce, it has to mean revert." And yeah, maybe it does, but then I have lived through this cycle long enough. I have seen similar currencies collapse very rapidly. So 2022, there was a cryptocurrency called Luna. In 5 days, it just went bust, and the reason was the leverage, and something was wrong with the math behind it. So anything can happen to Bitcoin. Anything can, in fact, happen to anything in crypto because let's face it, this is a new asset class altogether, and there are plenty of ways to go broke. So if you are in this, if you are bottom fishing, thinking, yeah, it's going to bounce, it's going to reclaim its old highs, just think that for one, you could lose everything. And is that really worth taking that risk in order to get whatever is the upside that you can imagine? Because there are plenty of trades where you can risk 10%, make 20%. You can risk 20%, make 60%. So I would say you can rather go for such trades than try to bottom fish Bitcoin at this point because fundamentals are terrible, sentiment is terrible, and let's face it, it's like the BlackBerry of crypto. It's outlived its usefulness. So, we have much better cryptocurrencies right now. So I really don't see Bitcoin even having a much of a future other than just being a relic that people hang on to for a while and then it just goes the way of all the other technologies which have died.
No, I get it. I mean, it's one thing to think about with certain assets, which is understanding how long they've even been around, which some of them haven't been around that long. Like if we look at Bitcoin, even back testing it, like, my back tests don't go back that far. Yes, some people say you can go back 15 years. Sure, I can go back about 15 years. Some of the assets, but most of the assets I'm back testing, I can go back 50. That's a really good back test, and this is completely new to the market. So it's not like I'm back testing like if there's a stock like a new energy stock that came out in, let's say, 2020, I understand what's going on with energy stocks most of the time, so I'm going to get a good understanding of it. But if I do this same thing with cryptocurrencies, it's a whole new asset class. So you just don't know where these things can go, how low they can go. Great trading vehicles, but long-term holding these things can be very dangerous at certain points. So, just pay attention to what you're doing. You want to trade it, great. Use a stop loss, manage your risk properly, and so on. But buying things as they're crashing isn't the way to go. That's the biggest rule in trading, which I find funny because like some people will say like, hey, don't buy silver, it's crashing today. Yes, I agree. Don't buy silver right now. It's just heading in a strong downtrend currently. The rate of change is kind of off the charts from the other day and so on. Don't want to touch it. But then they'll go and look at something like this and be like, well, this is cheap, so I'm going to buy this thing. There's no difference. I don't know. Like I like silver long term, not as much as gold, especially. But as a trading vehicle, like be out of it. Same thing with Bitcoin. Like if you're riding just a short term trend model, like be out of it. There's nothing wrong with having cash as a position currently. There's certain things that are trending. There's certain things that are not. Don't be scared to just say, hey, I'm out of this until it actually shows me something. Because like you said earlier, like with the RSI, like people will say, this is very oversold. What the fuck does that mean? I mean, really, like it drives me, those words, overbought, oversold, really drive me crazy because you can have overbought happen for long periods of time. I mean, silver was what? It was the most overbought it was in history at like $50. Then it went up to 120. Like same thing here. Like when new trends start, they are the most oversold or overbought that they ever will be. That's normal. These big rate of change moves create that, and that usually tells you that something has changed, something's different. Like this isn't how Bitcoin is looked in any of these downtrends, any of these little pullbacks. You're not seeing this massive one consolidation, bear flag, down again pattern. And if you're not seeing that in any of these, then why would you look at this and say, oh, this is the same type of action that we had in this whole uptrend? We're breaking structure here. We're moving down. I'm not saying like if you have a model and you're that wide on your stop or whatever, fine. But I am saying like if you're trading it as just a trader and you're trying to buy this thing today, I wouldn't do it. Just my opinion. I could be wrong. The shop can be wrong. But I even think bounces will probably be short-lived at this point. So speaking of
before
go ahead.
Sorry, just one final point. Like a lot of people ask me this question, like there are no leverage traders blowing up in Bitcoin. So is there something else going on? And yes, I think that really speaks to the kind of selling pressure that we are seeing. So usually when you have a big down move, it is algorithms, hedge funds hunting for stops. And once you find the stop, then there's a big wick and the price resets. Whereas here, what we are seeing is sustained selling pressure without any leverage traders getting blown up, which means this is real Bitcoin being sold by people who have bought it probably for cash or taken leverage in other means. And this is not traders. This is serious money that is exiting the space. So when you see a signal like this, run for the hills.
No, I agree. So here we go. Speaking of signals, now I think it's bouncing back a little bit today. I grabbed this chart right before the open, but bouncing back possibly a little bit today, maybe puts in a false breakdown signal, whatever. But to me, the relative strength isn't there in technology currently. Semiconductors, yes, it's there. It's been there the whole time. I'm still long semis. Have not been long anything software, have not been long any tech stocks. Not much in this whole sector for a while, and the relative strength looks like shit. It's basically topped out last year. I think that was October. Now it's just kind of rolling over, breaking to the downside slightly. We've been talking about this for a while, Kashop, which is this rotation that's been really like on the cusp this whole time. Last year, everybody was like, oh, well, technology did very well. It was the best performing spider sector. I'm like, yes, because the ones that were doing so well are not big in the S&P 500 anymore, so it wouldn't do anything, which is metals and mining. That was what, 80, 90%? I can't remember what we ended the year in the XME. If somebody has that number, please put it in the chat. Gold miners up over 150% for the year. I think we ended the year at GDXJ around 180. So huge moves there. But these are not very large pieces of the S&P 500 anymore. Same with steel stocks had a great year. Lithium stocks had a great year. Solar stocks even had a great year. So right down the board, we're looking at all of these stocks in the market doing very well, while people are still kind of going, well, I need the Mag 7. It just isn't. It just isn't. It doesn't work like that. And this chart's kind of telling you that you could be in a lot of other areas right now, or you could be feeling a lot of pain just hanging on to technology and believing that it's going to be what it used to be. And it's just not anymore. I don't think we're in a scenario where we're just going to continue to see technology lead the way year after year, especially this year. I think this will be a different year where we kind of rotate, continuing our rotation into base metals, industrials, and possibly a little bit more into energy, which we're seeing at the beginning of this year. Small caps are also doing very well. Micro caps are doing very well. I think that'll continue. But Kashab, what are you looking at here? We've talked about this for a while, and it kind of looks like it's happening. Are you looking at any of these names and thinking, hey, it's a good time to buy these things? Or are you looking more like, hey, this is the beginning of what we've been talking about for a while. I want to continue to own real assets over technology at the moment?
So if you look at particularly the software space, all of those stocks peaked in 2021. And the reason they had a crazy run was because, well, COVID, everyone was working from home and the use of productivity tools soared. So Zoom, which was not even a big name on most people's watch list, suddenly, well, zoomed. And so did all the other software stocks because people working from home needed those productivity tools, and that shined a light on those companies and investors bought it. It got so crazy that you had stocks trading at 60, 100 times sales, and people were like, well, they are growing at 20, 30% a year, and that's going to continue forever. So why not pay 60 times sales? And over the next 4 years, people have discovered why you should not pay 60 times sales, because even if you do grow your revenues, and some of these software companies, believe me, if you look at the fundamentals, amazing, like 20, 30% consistent revenue growth, profitability as well. So everything, the fundamentals are firing on all cylinders and the stock price is down. Why? Well, it was too overvalued and it is correcting. Now, if a software stock at 60 times sales is not a good buy, is it a good buy at 30 times sales? At 20 times sales? Well, it really depends. So I don't know where the bottom is. If it's at 10 times sales, then yes, the value guys are going to start taking a look. So until that point, I think software, you have to be very, very selective. So I did find one that I like, and I wrote a report on that for my subscribers. But other than that, I'm not really keen on bottom fishing or buying the dip in software because the valuation is still not there. Now, if you look at the broader technology space, it was driven by the Max 7 bubble, which is now coming back to earth. Now, if you do like technology as a sector, because, well, technology is a great sector, I would suggest you look at the Chinese technology stocks and avoid the US technology stocks. So, this way, you get the tailwind of the Chinese revival and valuations going up in the Chinese tech space. So, Chinese tech stocks, pretty much they have been in a bull market for the last 2 years, but it's still an okay place to add. And I'm not saying you go buy Tencent or Alibaba right away. I'm just saying you look for bargains in that space and you will still find some. Whereas in the US tech stocks, it is really, really tough to find bargains. One or two here and there, sure, but otherwise the entire space is way overvalued. Plus, we have the other headwind. So recently, there's this growing backlash against social media usage among teenagers or young adults. So a lot of countries are talking about banning social media or limiting their use. And we already kind of saw this with the gaming companies in China and other countries a few years back. So if this trend catches on, then it's going to get really tough for these companies. So you want to be mindful of those headwinds there. And if you look at stocks like Apple, well, Apple is losing market share in China. You have great Chinese companies which are developing much better smartphones right now, and they are taking market share. And the overall smartphone market itself is starting to slow down right now. So you have all these factors that are telling you you have to be very, very cautious in technology. It's been a great ride. It's been a great uptrend. I still think technology companies will do very well. They're going to do wonders for the world, but you do not want to own the stocks.
Yeah, I think it's one thing to think about too is it's kind of like the internet. Everybody's like AI is going to change the world and they're not wrong. And the internet is going to change the world in the 90s. They weren't wrong. But at the same time, it doesn't mean the stock market will just go up forever. Most of the time the market will front run things, meaning the internet comes out before we really start to really take off and start to use it in all the different ways we did, ebooks, selling things online, and so on. The technology bubble was huge. This is the 90s, so I remember growing up in the 90s on AOL.com and all that stuff. So I'm on AOL. You're starting to see the internet. You've got different like ways to download music and random stuff. And basically, like, yeah, the stock market front ran that and really thought that this was going to be the new thing. Then everybody wanted to get in because it was new. And then it just went sideways for what, 14 years, from 2000 all the way to, I want to say, 2014, 2013, around that point. So, this is how the market usually goes, which is AI is very exciting. The trade could die off for a little while, especially in these big names. I think there's some small technology names and speculative tech names that look really good, are very interested, especially overseas. Those are very interesting names at the moment. But if we just look at US large cap technology companies, at some point, there's going to be a rotation and other things are going to start leading the way. Think about the internet bubble. So during the dot-com bubble, like maybe AOL, maybe people thought AOL was going to be a much bigger company than Microsoft at some point. Pets.com could have been one too. People were just throwing money at just about anything, which could have been much larger. But at the same time, there was these ones that kind of led the way, but things also rotated. So things rotated where these ones people were very excited about, like Yahoo, AOL, and all these other ones, they started rotating into these other names that might have been a little bit smaller, a little bit more speculative. And these are the companies that we have today. I mean, Nvidia wasn't always a monster. It wasn't in the S&P 500. It wasn't that big at all. And then now Nvidia today is one of the biggest companies in the world, market cap wise. Not really anything else, but that's a whole nother story. You can get into that if you want at some point. But looking at the market this way, I just really think that we're rotating into something different. It doesn't mean the AI trade is over, but I think also the amount of energy and commodities we have to use to support the grid and the AI trade and all of the things that are happening in AI in the world at the moment is also going to continue to give a boost to these commodity-based sectors. So, getting to other things though, the KRE, so regional banks. Now, I only use regional banks really like it's trading vehicle for me. I also know that it tends to move with energy. Most of the time when I see the KRE moving, I think energy is going to move. This thing moved a little bit before energy moved, and that was a good beginning there to kind of say like, hey, we might be in an uptrend for energy sometime soon. But I want to ask you, can you break down why that correlation exists and also what you're seeing in the banks globally? Do you think they're in a good environment for them, or do you think it's like this is another short-lived trade that you're kind of in an uptrend at the moment and it might change sometime soon?
So for the banks, the way especially the regional banks, the way I look at it is, so something Soros said a long time ago, where he said, the way to make money in emerging markets is to buy when things are at their absolute worst and hope for it to get just a little better. Meaning, it's still going to be terrible, just not as terrible as it was yesterday. And I think the same thing applies to banks. So you want to be long the banks after the economy has gone to its absolute worst, because from there it only gets better. You want to be long the banks when a country is experiencing inflationary growth, because at that time the bad loans are not really a problem. When you have deflationary growth or real growth, as the Austrians would call it, well, then that's a problem for the banks. But if you have inflationary growth, then they'll do just fine. So I think what we are seeing right now in the US is inflationary growth, and that's going to be good for the banks. Now, how long this lasts, I do not know. And are there better ways to play it? I think so. But if you're looking for something that's a little uncorrelated to your other trades, especially if you are heavy into gold mining stocks like I am, then I think it's worth a look.
Yeah, I think these things are, starting to move. And I think there's an interesting thing to think about here, which is everybody's very bearish right now. And now, once again, I'm not saying that's wrong, but I am saying there's things to look at here that are keeping me bullish. Now, people probably think I'm very perma bullish most of the time. I'm just, when we're in a bull market, you're going to hear me be bullish as fuck. When we're in a bear market, you're going to hear me be bearish as fuck. That's based on trends. I don't do that for myself. And so right now I'm looking at the evidence and continuing to see, like, one, everybody's like, oh, it's going to be a bear market. I'm like, we're literally like 5% from the all-time highs. Like, I'm not worried about it just yet. That will happen at some point. I will change my mind and I will change as the sectors change. Let's say, let's say technology keeps breaking down and so on. And let's say staples stop moving higher and all these things. Maybe I'll change my mind. But looking at this, I'm saying, like, if the regional banks are moving up, and people are looking at crypto and saying it's going down, they're looking at technology and all these other things and saying these are going down, I'm going to point to the regional banks are in an uptrend. That is telling me that there is nothing wrong yet structurally. Now, if these start to turn over and roll over very quickly, I will be very bearish at that point. But I don't see any reason to be bearish just yet. Even biotechs, some people will be like, oh, it was down a lot today. I'm like, look, man, that's very short term. You could say the biotechs are getting hit here and there. Long term, this strong uptrend. Same with this long term, strong uptrend. Then we move to the transports. Another thing we're seeing here is this is in a strong uptrend. And going back to this old school Dow theory, which I still subscribe to, I still think that that is a great way of looking at the market and makes it very easy to understand what's going on. Is tells you if the Dow is making all-time highs, which it did, and actually the Dow is holding up much better than the S&P 500 currently, a little less technology. If we're looking at this scenario here, where we're at all-time highs, and then the Dow is holding up pretty well, and then we also have regional banks. Like, I'm not bearish yet. I don't, and not to mention more stocks continue to go up in the market than stocks are going down. So advances minus declines. So basically, we're seeing more stocks advancing in the S&P 500, the New York Stock Exchange, and so on. Then we're seeing stocks decline currently. And then also we're seeing the signals that I just kind of put up here. I think we're still in a bull market. I just think it's shifted from everybody's favorite trade, which is the AI trade, into some of these other sectors. But I want to hear your thoughts, Kashop. You're always looking at the market from a different angle from me. Are you seeing any headwinds out there? Something that the market could get hit by pretty soon? Because it looks like, number one, it's a midterm election year. There's a lot of volatility these years, which is very normal. But I'm wondering for you, are you seeing any reason that people should be on the lookout for something coming up? Or should we just stay long currently? Or should we be just picking and choosing a little bit better? I want to hear your opinion.
So I think as an active manager, we should always be picking and choosing and not going the way of I'm going to index to the Qs or I'm going to index to the SPY. So we don't do that. And I think so 2023, 24, those years, it was really hard for an active manager to outperform, especially if you were looking at the benchmark and going, hey, I missed my numbers this month. What do I do? Well, I have to try to catch up. So if you played the catch up game, or if you took a bold call and say, Apple is 7% of the SPY, I'm not going to be allocated to Apple because I don't believe in it. Well, then guess what? You underperform. So in those years, it was really tough for an active manager to beat their passive benchmarks. And what is happening, especially the last 2 years, is it's getting a whole lot easier. And the reason for that is because all these indices, all these benchmarks, so they're all relative strength indices. So they just strength beget strength. So SPY doesn't say, okay, we think that Nvidia has run too much, we are going to cut our allocation. They don't make those active decisions. So they make a rules-based decision based on market cap, which means they let their winners run. And at some point, your winners stop running, which means it's easier for those who are not holding those winners to actually outperform. So what's going to happen is there's going to be a lot of fear in the market in terms of the media, in terms of the journalists. They're going to be like, hey, the Nasdaq is down 2% today. Hey, the S&P is down 2% today. Or Nvidia is down 5%, 10%, whatever. It's so scary. Amazon is down 11% on earnings. They're going to be putting out all these doom and gloom press releases. And you're going to start looking at active managers' P&L and going, hey, these guys are doing great. How are they doing great when the market is not doing good? Well, they are doing great because they nailed the rotation. They nailed the fact that these relative strength indices, these benchmarks, you should pretty much just ignore them and have an absolute return strategy. And if you do, you're going to just nail these trades because it's been so obvious. It is so obvious if you are looking at this and going, wait, Nvidia at $4.6 trillion, $5 trillion. That's insane. They don't even make 200 billion in sales. Why is it priced like that? And you're like, I don't understand this. I'm going to avoid it. And that is all you really need to do to outperform. So I think the people who think and invest are going to do well. The people who follow the market, which is just the Dow, the Qs, and the SPY, they are going to get steamrolled. And it's good for us because we are in the latter camp. So I think we are going to have a great year.
I think so too. I think it's one of those, you just got to be active at the moment currently, and I think active managers will always be able to outperform. It depends on what you're doing. Like if you're able to find the best sectors, find where the strength is, continue to go into those areas, you're going to make a lot of money. Speaking of which, somebody did ask this question, which is kind of in line with what we're talking about. In a world of commodity wars, which countries and assets would benefit the most? Which ones would be vulnerable? Um, for me, I'm not really. Kashop could actually answer this better than I even can. But for me, I'm just looking at where the strength is. Now, if we're looking at commodity countries, you have things like Saudi Arabia, even Canada, a lot of Latin America, Africa. So if you're looking at these areas, you're going to see that they have been showing a lot of relative strength lately. So I would continue to just look at those areas, hold those, but also just look at for the relative strength. What's performing well this year? I mean, we identify this every week at Against All Odds Research. So I'm always putting out our scans of where the strongest areas, where the strongest countries are at all times. So we're seeing those in real time and able to update where we want to be, position ourselves, and what countries we're buying currently. So I think that that's just the way I'm playing it. But Kashop, what are you seeing? You probably have a specific countries and specific things that you're looking at. So is there any areas that you're thinking about for this?
So I would say in a world of commodity wars, everyone loses because nobody really wins a war. It's about who loses the least. Now, if you're asking who loses the least, well, then that's a tough question because what does the war look like? Is it an oil war? Is it a war on fought over rare earths? Is it a war fought over copper, iron ore? Which metal? So that would really determine who is going to lose the least. And right now, that's hard to say. But the way to think about it is, let's say we are starting a commodity war. Now, in this scenario, which countries have the commodities? How are their currencies trading? Is there an opportunity there? Is there something that is specific to a country? For instance, Chile and copper. Is there something that is so specific to a country that whatever happens, if demand for that metal goes up, this country will benefit? Now you find trades like that, then you will make money. But the problem is, let's say the war is oil and not copper, and there are uh, cross effects because of one commodity moving in a particular way. So what we saw with silver, when silver shot up, platinum, palladium, and gold went along for the ride. When silver went down, those went down as well. So you'll have moves like this. So it's going to be really hard to say, if X happens, Y happens. That's not the way it works in the commodity world. But if you keep watching, if you keep looking at what's happening, if you keep looking at the charts, paying attention to the currencies, I think you can kind of figure out which would be hurt the least and where the opportunity is.
No, great answer. And let's get to is it? Paris said something. There it is. Okay, so I'd love to know your thoughts about Chinese yuan's potential of being a reserve currency. So it's a tough one. So this is one of those that's like, Kashop and I grew up in this environment where basically everybody was like, the debt is going to crush the market, and so at some point this is going to happen, and we will no longer be the reserves currency for that. There's a million reasons for it. However, trading it is incredibly hard, and it's going to continue to be incredibly hard. So I don't think you want to get too wed to the idea that this has to work one way or the other. As complete speculation, I am not sure. I'm certain at some point, just because of the way the cycles work. Now, I'm not pulling a Ray Dalio and saying I know exactly the future. I am saying that most of the time the cycles work, people change reserve currencies over the years. I think we still have that status for a little while longer. Now, I don't. Now, at the same time, I do see that we've pissed some people off, and there is some scenarios here for that to change. And so, if that changes, would it be China? I'm not sure, but I think China benefits either way. Like if they go to the euro, I think China would be just fine. I think if they go, anywhere, but I think it's really between probably two countries at the moment, which is China, or two, also not country, but Europe as well. So the euro. So I do think it's either one or the other. Now, I'm not a big fan of the euro. I think that would be a problem. Also, not a real big fan of the yuan, but I do think that these are the two currencies that could happen. But I think the euro is possibly the option that the globe would want to go to before they go to the yuan. But I also want to know, Kashop, what's your thoughts on this? Because this is more your field than mine. I know a lot of market history just like you do, but you're also looking at this from a really good perspective. Also, being in the United States sometimes colors us a little bit in one way or the other, and we're missing certain pieces. So I'd love to know your thoughts on it.
So as a reserve currency, so here's the thing. I think the dollar can go down another 20% and it can still be a reserve currency. The catch is that the US should not like recently what the US did in Brazil was they are like, hey, we don't like what you're doing, so we are going to freeze your assets which are in the US or in US dollars or pretty much anything that the US can touch, and they're like, we're going to freeze them. And they did that using something called the Magnitsky Act. So you can go look it up. I've done an article on this. So if the US starts doing this stuff, now that's going to be problematic for the dollar. It's not about the dollar can go down 20% and the dollar will still work just fine as a settlement currency, as a reserve currency. But once you start doing these things, once you start freezing people's assets, then they are going to be like, do we want to be in dollars or do we want to be with a partner who promises not to freeze our assets? Now that's where the other currencies come in. So it's a very specific scenario where the dollar loses its reserve status and the Chinese yuan gets there. So I don't think we need to worry about that right now unless you are politically exposed in one of these countries that Trump hates. So right now, just park that question and focus on other things because there's really nothing to be had by arguing this point over and over because you have guys, the dollar milkshake guys, the dollar bulls who keep saying uh, that China is never going to be a big power. You have these China haters like Kyle Bass who always chest thump and say US is great and Texas, go Texas and all that. And yeah, like I agree with all those sentiments. Like you are a product of where you came from, but when you look at what's happening in the world, especially when you look at a long-term trend like what central banks are doing, that's far beyond our trading window. So it's helpful for us to know this history, but to not act on it.
No, I agree. So a couple of things just to add here and end on. I'm probably go through these pretty fast because we don't have much time. But the dot-com bubble, this is where we topped out in 2000, what we were talking about earlier with the internet stocks. And that's where small caps kind of took over. We saw small caps, we saw energy, micro cap stocks, gold miners, any metals and mining stock basically, and financials kind of bottom out right around that time. And then basically that was a big run that happened in 08, really, really topping out when gold topped out in 2011. And then now we did see a kind of similar move in 2020, where basically we started getting long small caps again, a lot of energy stocks. There's a big move after 2020 into those, and we saw that rotation happen right during the election in 2020. Now today we're kind of at a similar spot. This thing rolled over pretty hard recently, and it's making a new low. So I do think that this is something to keep on everybody's radar, and I think the rotation into small caps is something that you want to do. The energy sector, this is a good breakout here. But what I want to see for confirmation, very similar to how we really didn't get confirmation back in 2024, is I want to see TLT breakdown. I'm long energy stocks. I do think that they're going to move here, but at the same time, I do want to see this thing break down. Now, granted, the bond market is being a little bit manipulated currently, not as in like some crazy manipulation and conspiracy about how we can't trade it because of it. Just they're not issuing as many bonds now in the long end of the curve, which is kind of creating this very long, low volatility move. But at some point, that is going to change. And when that changes, I would bet that happens to the downside for the moment. But I want to keep an eye on this thing. I want to see that this continues to the downside as energy is breaking to the upside. Gold, I've just brought this chart because I wanted to also mention, like, when people are looking at energy and we go back one, people continue to think that this consolidation was never going to break out. And if you've been a commodity trader for a long time, or a trader generally for a long time, things go dead and sideways for long periods of time and are very hated. But people forget that this happened in gold. Like people, especially recently, the huge peak in 2020, that was in August 2020. We went sideways to 2024. People forget that that happened. So the same thing happened in energy, where we peaked in 2022, 23 basically, and then we went sideways until now in 26. This happens in commodity markets, commodity based stocks, because they go dead, everybody hates them, and then they make big moves. Commodities are very boring until they're the most exciting thing in the market, which is where Richard Russell's famous phrase, there is no fever like gold fever. And just ending here for me, this is gold. Now, we talked about silver. We've been out of silver since last Friday when the stop got hit for me. We also issued alert for people to sell it around 111. So we did have a great run in silver, great trade, buying it from the 20s all the way up to 111. Now, gold is barely hanging on for me. It actually came very close to my trailing stop loss, and then it went above that and continued higher. So we'll see if this actually bottoms out and continues higher. It might hit. I'm just updating everybody on the trade. I've been in it all the way since actually a little bit earlier before that. I feel like the signal was here, which would be December 23. But really, since 2024, it's just been in a strong uptrend. We've just been riding this one, not doing anything. The only way you get to do that is by really riding the trend like this and having trend following models. So the trailing stop loss is there. Our members actually have seen where that's at from when the trade was put on. I have updated them many times on what's going on, including last week as well. So Kashop, to end the show, what do you think about precious metals? Dead in the water, something that people should keep an eye on? What are you thinking here?
So I think the last time I sold a precious metal stock was IM Gold, and that was not for any gold specific reason. It was because the currency risk got a little too much for me. Sorry, the country risk got a little too much for me. After that, I've not sold anything. I'm still holding everything, and the reason is winning trades, you never know which years you're going to get the biggest return on your winning trade. So you want to compound for an entire commodity uptrend. Then when you have a stock that's up 400%, 500%, 600%, you just don't let it go. Even if it means temporary pain, even if it means sharp drawdowns, you just hold on and some of these companies, they're all small caps. So there's a good chance that gold goes lower. Let's say gold goes to $4,000 or even $3,500. There's a good chance these companies get acquired. So why would I sell just based on the gold price or the macro? So I think fundamentally, gold stocks look great. Fundamentally, gold also looks great. It is just that once you have a parabolic move, there's going to be some kind of back and forth. And if this back and forth is, say, 6 months, I'm fine with it. If this back and forth goes, say, 2 years, 3 years, then obviously I'm going to re-examine. But I'm prepared to sit it out and just wait for gold to find a base and consolidate for a while. 6 months. 6 months is not a problem for me.
No, I like it. Yeah, I think it could possibly just stay here and consolidate. I just don't know. You know, that's the thing. That's the hardest thing about it as a trader is admitting like I don't know shit. I would love to say I know something and be able to get on here. Like there's people who will tell you they know something. But I'm the guy who, you know, Kashop and I will make these types of trades and we'll be in them forever from all the way back here, all the way up. And I will not get on here and tell you guys that I knew gold was going to hit $5,000. I didn't. I had no idea that it would go that far. It just did. And so that type of trend, you don't really get in or able to really stay in that without that little bit of just being comfortable with like, I don't know where this ends up. I know the probabilities are on my side. I know the price is in an uptrend. I know that the regime is correct. I know that the macro is lining up. I know that the bond market is in a bull steepener, which is usually good for gold. Between those things, I'm going to take the trade because that's the highest probability bet. It's kind of like betting against gold here. It's like the high probability bet is still for more upside currently. When this starts to break down, or let's say the yield curve changes or something, that high probability bet changes. So at the moment, the bet is still possibly more upside. So I would just be very patient here. If you have position, like something for me, silver, it's gone. You know, you have positions, they're getting stopped or whatever. You're, a trader like me, do it that way. You're looking at it from more of a fundamental view, like Kashop. Kashop's thinking there's more upside because the fundamentals look good for the stocks that he's in. But you have to do this for yourself. You have to understand how you're going to trade this and how you want to do this to make money for yourself. It isn't about what Jason's doing or what Kashop's doing. Why we show you what we're doing is so you can learn and get an objective view and also not a bullshit view. We're not guys on Twitter telling you guys how great we're doing, how amazing we are, how much money we make every day, and you guys are stupid for not listening to us. We're guys that are telling you this is what we do. You can learn how to be a trader yourself, and we will show you with a clear lens about what we do and how we catch these trends and how we make money in these markets and how we've done it for years. And that's what we do here. So, all right, guys, I got to run. Kashop, thanks for joining me. This was great. Next week, I will not be on Friday, possibly Saturday. So we'll try for something Saturday. Kashop, do you have time Saturday?
Yes, of course. Yeah.
Okay, cool. So we're going to try to do the live Saturday next week instead of Friday. So we will see you guys Saturday. I'll see you guys soon.
Bye, everyone.
Also, Gold Rush Live is today at 12:15. We had to move it from yesterday. So today at 12:15. See you guys then.